Corn joined soybeans in sinking lower midweek. Are there reasons to be optimistic about the grain market? AgNews' Michelle Rook tries to find out in Markets Now.
Well, a down day in both corn and livestock futures on Wednesday. Jim McCormick is in with analysis. Okay, let's talk about the corn market. We'd had a nice ride. Was it profit taking that we saw on the setback or not, Jim?
I would argue it is a little bit of profit taking, Michelle. If you look at it technically, the corn market's had a nice little bounce. It went to kind of the long-term downtrend resistance, kind of drawing off of the late summer highs, probed through it briefly, and then it kind of fell back. And, I look for maybe this market to feel a little bit more pressure here. Remember, we're just beginning the harvest. And unfortunately, this is, we don't believe the crop is as big as the August number says, but it's still going to be a crop. Probably even a 183 would put you at a 16 billion bushel crop. 90% of this crop's unsold. That would argue you've got somewhere between 5 and 7 billion bushels of hedge pressure to come at the market, which would represent somewhere between 200 and 300,000 contracts of hedge pressure on the market. And I think that could drag us a little bit lower, at least near term.
What about the soybean market? Is the realization coming in there, even if the crop gets smaller, it will not offset the loss of China demand?
I think you've nailed it. I mean, the market is coming to that conclusion. We had a Chinese official in late last week before the Labor Day weekend. There were no announcements. And plain and simple, even if you drop this national bean yield a bushel, it's roughly 80 million bushels of beans. We're figuring we've lost at least 100, 150 million bushels of Chinese demand already. We've missed the September shipment window. It looks like we're about to miss all the October shipment window. And right now, Brazil's working on filling in the November shipment window. So if we lose those windows, you're talking maybe 400 million bushels of less demand. That'll more than offset a bushel loss in the national yield.
Do corn and soybeans then just continue to slide through harvest?
Historically, that's what you would look for. On the corn numbers especially, you're looking at a crop that's growing year-on-year supply over demand. Historically, when that happens, Michelle, you don't put the low in until late in the fall, more like an October, November timeframe.
And a lower cattle market on Wednesday. Is this routine profit taking, Jim?
A little bit of profit taking. Remember, we do have a big jobs number at the end of the month. Last month's jobs number were definitely ugly. The revisions were ugly. I think a weak jobs number is going to signal maybe the consumer has finally hit that wall. The market's been trying to ration out demand, and we might have finally reached that point. Only time will tell.
That is Jim McCormick with agmarket.net. We'll have more Ag Day coming up.
To contact Jim McCormick at Ag Market, call 844-4AG-MARKET or visit their website at www.agmarket.net.